Good morning, this is Larry Edelson for my Uncommon Wisdom video update for Thursday, July 8th. I hope you all had a wonderful July 4th holiday weekend. It's back to the markets this week, and we're seeing some more pretty wild action here. Let's go right to gold, which has broken below short-term support that I've been showing you on the charts lately. Here is the gold chart again. You can see that gold broke below this support line at the 1202 level, and it's now drifting lower to the 1170 level, which is critical short-term and intermediate-term support. I do expect gold to get that low in the next few days, perhaps delaying it till next week. But we should see gold find a very good bottom here at 1170 and then begin to rally back up above the $1,200 level and probably start to form another top here at the 1257 level and chew away at that top. What's driving gold lower? Basically right now it's the fact that the dollar's in a sideways trading range and there's no bad news coming out of left field at the moment, and we are in the summer seasonal weak period for gold. Gold seasonally is very, not very weak, but traditionally weak during the latter part of June into July and even August. So I'm not expecting a breakout yet to the upside, just to new record highs, that is, in gold, until we get a test of support here. For you long-term followers of the gold market, there is no reason to be alarmed by this pullback here. It's a rather nice, technical, healthy consolidation in my opinion. I'm not concerned at all about the intermediate or long-term bull market for gold. For short-term traders, this is going to be a choppy period, but the bias should be towards buying gold on these dips, especially down here, where for my trading services I'll probably be even looking to add some calls on gold miners down here, as well as some additional positions. Let's take a look now at the Dow. The Dow remains very weak, to say the least. We tried to rally a little bit on Monday, on Tuesday after the holiday. We're unable to get above resistance really at the 98.50 level. The Dow is pointing considerably lower. It may take a few more days to start the next leg of its downtrend, but I am looking for a minimum target of 9,000 on the Dow and probably 8,700. By now, if you've been following me, you are certainly way out of the stock market. I warned back here at 11,000 the Dow was making a top at 11,257. The high came in just shy of that. I told everybody to get out of stocks back here. I warned again here. I warned again here. So if you've been following me, you have no exposure to the stock market. You are in select natural resource stocks for the longer term, and you should maintain those positions. Gold shares took a little bit of a hit last week, but they remain poised to gain even if the Dow drops, and they have been vastly outperforming just about every other investment out there. Let's take a look at the dollar now. This is the dollar index chart that, again, I have been following for you. I did clear some of the lines out for you so that you could take a closer look, and let me pull this down here. I want to put some new lines on here and update this chart for you. Let me just maintain the range there. Okay, here we go. Follow me along here right now as I draw in some standard trend channels that I use in technical chart analysis. I've drawn in here a cyclical downtrend line by tying in this high just before this peak here and the subsequent reaction low here, and then I created a parallel off that, which I'm going to use to capture this reaction high over here. You can clearly see now that the dollar index again is in a pretty nicely defined downtrend here. However, there's some nice cyclical support coming in here right about here. which is a cyclical line that I've drawn from off of this high here, going back really 1, 2, 3 isolated highs prior to the major bear market rally high here, over towards the lows formed in the last few days here, and this previous low, reaction low back here in early May. We're going to find some support here in the dollar. It may dip a little bit lower, but then it should begin a rally back up to 87 or so, probably into some resistance midway here in this congestion area. But that's about it. The dollar's going to trade in kind of semi-wild swings in a trading range until its next turning point on the cycles for the dollar, which arrive in late September, early October. I don't expect much out of the dollar or the currency markets except choppy trading for the next 3 months. And then come fall, we'll start to see some emerging solid trends in the currency markets, most likely to the downside again in the dollar, with the greenback resuming its long-term decline. That's it for now. Because this is a shortened trading week, we're not seeing a whole lot of action, some choppy action, but next week I expect the opportunities and the trends to straighten themselves out and give us some good entry points for some positions. So please stay tuned to my Real Wealth and any flash alerts I might be sending out, as well as if you're a member to my trading services, stay tuned for any issues I'll be putting out there. Till next week, this is Larry. Have a good weekend.